Hey guys, Aaron here with Carnivore Trades. So got a little trade idea here. We're taking a look at Walgreens Boots Alliance. So embattled company here, dealing with a lot of problems, theft, store closures, stuff like that. Been a really tough year for the name and a lot of retail stocks as well. Also today, at Making Matters Worse, CEO stepping down, and they kind of guided, pretty weak quarter here. I don't really care about the story though, so long as the company is not going bankrupt or there isn't like lawsuits or anything crazy like that. But company under a lot of pressure here, and it has had a gigantic fall. If we look on the weekly, just in late 2018, you were at 85. Didn't participate in any of the pandemic rally really. Actually went down in 2020. One of the few stocks that was red in 2020 outside of energy, and just kind of continued beat down here. Starting to get pretty extended here on the weekly. And again, we had that big drop on the earnings last quarter, and 47 million shares there traded on the 27th. We're getting pretty close there too. 22 million shares here, as we are getting close to that 23 handle. But what I find interesting about this is if we take a look on the monthly, you can see you actually are coming into GFC levels here. So if we just draw this in, you can see right there, that box, this is a demand zone, and this is where the institutions reversed the stock during the global financial crisis. You can see we had a big monthly inside bar candle pattern. Usually that's set up for a continuation lower. If we can zoom out there. Again, that's usually going to be a setup for a continuation lower. But that failed, right? So it went to the other way. How does it fail? Well, you have to have a lot of institutional sponsorship to make that pattern fail. So that's where the money is sitting, right in this zone here. So what I'm looking for, we just got the monthly close yesterday, and doing this video on September 1st. We just got the monthly close yesterday, and we're puking now again here today, as you can see. I think it's getting kind of attractive. You see a little bit more volume like this, maybe a gap down. It's going to be Labor Day, after Labor Day Tuesday, so this video should be uploaded on Monday. But either way, starting to get close to capitulation volume here, and you're into, again, GFC levels. I think it gets interesting, sub 23, risk reward here. You got to think the lows here around 21.28. I think that was the final low there. 21.50, 21.28. So not a lot of risk here. And I mean, upside, when you get these kind of parabolic moves to the downside, there's nothing to say this doesn't get back to 28, maybe even 30, once the stock has fully been liquidated here, and you get all of those people that held long the entire way to finally give up on it. So I think it's interesting. In this area, I've been following it for quite some time. I've held off on buying it, but now it's starting to get really attractive. I think if you get a gap down early next week and maybe one more flush, this gets really attractive. Risk reward here, I mean, what are you looking at? $3 on the downside, right? If we look back at the monthly, you do a weekly, monthly close below 20, but there's still a lot of support here, even at that 20 handle, versus $7, $8, $9 on the upside potentially. So I think it's good risk reward here. Little trade idea, and I'll obviously update you guys if and when I see anything change on that. But definitely interested in that trade today. Let me know in the comments what you guys think of that. A lot of talk about CVS as well. I believe Michael Burry actually just took a position in this. In any case, let me know if you like that trade idea, and I'll definitely be following this one over the next couple of weeks. Anyways, guys, you take care. Come find me on carnivoretrades.com. I will talk to you guys all when I see you next.